Hi, good morning. We are Team D, and we'll be presenting our group project on Suncor. Amandeep Kaur will be doing the introduction. Harpreet Kaur will cover profitability ratios. John will cover liquidity and leverage ratios. And my name is Adil, and I will be doing efficiency, market value ratios, SWOT, and recommendations. Over to you, Amandeep. Yeah,
Hello,
action.
myself Amandeep Kaur, and now I'm going to talk about the background of the Suncor. Suncor is a leading energy company based in Alberta, and it was founded in 1919. It has a rich history in Canada and has grown to become one of the Canada's largest and most respected energy company. They started being called the Sun Company in 1919 and discovered Alberta's first oil sand reserve in 1967. In 1992, they changed their name to Suncor, and in 2009, Suncor absorbed Petro-Canada to become one company. Their operations include exploration, production, refining, and marketing. So, major competitors for Suncor Energy Company are Imperial Oil Limited, Ambridge, TC Energy, Pembina Pipeline, and so on. These companies operate in the midstream oil and gas industry and have similar business model. Major trends currently being observed in the energy industry are to move to sustainability and clean energy sources.
Hello, friend. I will start with profitability ratios. In that, firstly, I start with gross margin ratio. As we see in the graph, this ratio in 2022 was calculated to approximately 0.4257, meaning every dollar for they made. As we've seen, it looks their costs are good in the starting years. It has been stable between 220 and 29, as it's approximately 0.39 to 0.38. However, it has been dropped due to COVID-19 in 2020. Approximately, it's a 0.1743 dollar. Since it has been a positive trend and peaks its value in 2022. Analyzing the peer group margin ratios for 2022, Suncor is competitive and higher than the industry average of approximately 0.2671. And another competitor is TC. As Energy has the highest ratio in TC Energy Company, it's approximately 0.4456, while the others are which are lowest is Sanabos Energy Energy. It's approximately 0.1698. As we've seen, the Senco should maintain its cost control strategies to sustain and increase its ratio to stay competitive. While in an operating margin ratio, these ratios are follow the increasing and approximately decreasing trend. As we've seen, in the starting years, it is approximately stable in the first 2 years. It indicates that their operating expenses have increased since 2020, so their profit margin is increased. Analyzing the peer operating margin ratios for 2022, Suncor is competitive and slightly higher than the industry average of 0.2124. The TC Energy has again its highest ratio at 0.3861, while Sunbus Energy has the lowest at 0.1569. Suncor operating margin is reasonable, but it has room for improvement. If we talk about the return on asset and equity ratio, ROA and ROA for 2022 were at 0.1073 and 0.2306 dollars respectively. As we've seen, the returns were steady in 2018 and 2019. After analyzing the peer group for ROE and ROA, it can be observed that the Suncor is above the industry average in both instances. However, the Imperial Oil stands as the company with the highest ROE and ROA among the top companies in oil and gas. On the other hand, the TC Energy has the lowest at 0.0219 and 0.065 respectively. Uh, as we've seen, the Suncor should continue investing in projects that generate strong returns to improve their metrics. Now, my friend, continue with.
Uh, Thank you. I'm here to talk about liquid ratios and leverage ratios. Coming on to the first point, we're going to talk about the current ratio. That this ratio shows Suncor's ability to cover its short-term liabilities with its short-term debts. This was calculated for 2022 as 1.1295, which can be considered reasonable. If we look at this time trend, it has been gradually increasing since 2018 at 0.8439 to the current value. They have increased their ability to meet strong liabilities, which can be considered as a strength. Observing the current ratio for the peer group, we can see that Suncor is higher than the industry average, but only comes third behind two other competitors. However, Suncor's current ratio at this point in time is healthy. And talking about the quick ratio, uh, we have mentioned the graph below. This ratio is to measure of liquidity from current assets. It was calculated as 0.7365 in 2022 and has improved over time from 2018, showing better short-term liquidity. Analyzing the peer group quick ratio for 2022, Suncor is mildly higher than the industry average of 0.6682, but still not the best out of its competitors. Converse Energy and Imperial Oil have higher ratios, while TC Energy has the lowest. Talking about the cash ratio, this ratio shows the ability to cover the short-term liabilities with cash. Suncor's cash ratio is calculated to be 0.1539, which is lower than ever. Cash margin was highest in 2018 at 0.2154 and has dropped 6% to its current value in 2022. Comparing the ratio of Suncor to its competitors, it can be seen that Suncor ratio is lower than the industry average, which is 0.2238. Converse Energy and Imperial Oil have the largest cash ratios at 0.5640 and 0.4213 respectively. Suncor should increase its cash reserves for added liquidity in case of any emergencies and unreliable market dynamics. Finally, talking about the net working capital ratio, the ratio remains the efficiency of working capital management. Suncor's net working capital ratio is currently highest in 2022 at 0.0197, which was the lowest 4 years ago at 0.0180. Comparing the cash ratio of Suncor's to its competitors, it can be seen that the industry average is at minus 0.0059. Conover's Energy and Imperial Oil have the highest NWC ratio, while TC Energy has the lowest. Currently, Suncor has the positive net working capital ratio, which is a positive sign. It is essential for them to maintain this in the future. Yeah, talking about leverage ratios, total debit ratio, Suncor has maintained a moderate level of debt, and this ratio has been relatively stable over time, getting lower since 2020. This is a strength as it suggests sensible debt management by their leaders after a pandemic. Suncor's total debit ratio is moderate and in line with the industry average. However, some competitors do have a lower ratio, such as Imperial Oil and Pembina Pipeline Corp. Talking about debt to equity ratio, the ratio indicates the proportion of debt used to finance Suncor's asset. Suncor debt to equity ratio has been decreasing since 2020, which it was at its peak at 1.3664, which is a positive trend indicating reduced financial risk. Analyzing the peer group's margin ratio for 2022, Suncor's ratio is lower than the industry average of 1.4290, but still higher than some of their competitors. Imperial Oil has the lowest at 0.9419, followed by Pembina Pipeline at 0.9935. Suncor should continue to reduce its debt to improve its financial flexibility. Talking about invest and cash coverage ratio, Suncor's interest coverage has been improved significantly since 2020, and it's going at a steady rate, reaching its peak in 2022 at 16.0983, indicating its ability to meet interest payments. Their cash coverage ratio is also good, reaching 26.6208 in 2022. These are substantial strengths which provide evidence of strong financial ability. Suncor's interest and cash coverage ratio is stronger than the majority of the companies, indicating ample capacity to cover interest expense. However, it is lower than the industry average due Imperial Oil's interest coverage ratio of 155.0667 and a cash ratio of 188.3667. The highest rate of IMO.TO is because of their interest expense, which is only 60 million compared to its competitors, which have a higher interest expense. Now I have Adil to talk about efficiency ratios. Thank you.
We'll move on to efficiency ratios. So the first one for this is the inventory turnover ratio. So this one has Suncor has a reasonably stable inventory ratio over time, indicating consistency in inventory management. The calculated value was 4.8246 for 2022. And for the peer analysis, we can see that Suncor's ratio is the lowest compared to their competitors and hugely different from the industry average of 16.47. Uh, Pembina Pipeline Corp has the highest inventory turnover ratio at 30. So what Suncor can do further is to consider optimizing inventory management to further reduce cost. Looking at the receivables turnover ratio, so this turnover has also remained stable relatively since 2018. It reflects the company's efficiency in collecting accounts receivable. So this was calculated as 9.6137 in 2022, and looking at it with all the different competitors, Suncor's turnover is competitive, but it is lower than the industry average. Suncor should continue its efficient accounts receivable management to manage customer credits better. All right, so next we look at the days sale of inventory and the days sale outstanding. So both these ratios show how long a product remains in inventory before being sold and how long it takes to receive payment for that sale. So the number of days have been increasing since 2018 to 2020 from 104 to 47 respectively. However, since 2020, it has been going down. They have shown improvements in their metrics over time, and this indicates better operational efficiency, right? Current values were calculated at 75.6 days for DSI and 38 days for the DSO. Looking at comparing them to their competitors, Suncor's number of days is the highest compared to its peers and twice as high as the industry average of 30 if we look at days sale of inventory. So Pembina Pipeline Corp has the lowest number of days at just 12. And for the days sale outstanding, Suncor's number of days is 38, which is lower than the industry average, but it's not the best. Synovus Energy has the lowest days with just 16, and TC Energy has the highest at 97 days. So what Suncor should do is that they should focus on reducing the cash conversion cycle by optimizing inventory and the accounts payable process. Lastly, we look at the market value ratio of price to earnings. All right, so a price to earnings ratio, this ratio is found using the market value price per share and Suncor's earnings per share. So the 2022 value was calculated to be 6.256, the lowest it has been since 2020. There have been constant fluctuations in this ratio due to market dynamics and due to different circumstances, but it can currently remain stable, suggesting a balanced market perception. Comparing PE ratios to its competitors, it's lower. Suncor's ratio is way lower. So this can indicate that it is undervalued compared to the market. So TC Energy has the largest PE ratio at 80.1, followed by Enbridge at 39.27. So what Suncor needs to do is communicate the company's strengths to investors for potential valuation improvement so they can remain competitive in this metric. And the market to book ratio. So this ratio measures the market capitalization of Suncor compared to its book value, which is the equity. So the 2022 value was calculated to be 0.0010, which has grown slightly over time. This indicates that Suncor's value is growing in the eyes of the market. But if we compare that to its competitors, it is in line, but still lower than the industry average of 0.0018. So Imperial Oil has the highest market to book ratio of 0.0029, followed by Pembina Pipeline Corporation. Suncor needs to focus on growth strategies to increase its market perception to increase this metric. Moving on to the last ratio we have, which is enterprise value by EBITDA. So EBITDA, so this ratio considers Suncor's enterprise value and earnings before taxes, depreciation, amortization, and interest. So this calculated value for 2022 was 3.0763, the lowest in the past 4 years, which is a good sign. It reached its peak in 2020, and since then it's been decreasing, which is a positive sign, right? As I said. And conducting the peer group analysis, this metric for Suncor is lower than the industry, which makes Suncor more attractive than its competitors or than anyone in the industry. So the industry average is 9.44, and the company with the highest is Enbridge at 14.39. So Suncor should continue to optimize its operations to enhance this metric further. So after doing all this analysis, we have curated some strengths, weaknesses, opportunities, and threats of Suncor's financial performance based on that. So what their strength lies in is liquidity and solvency, profitability, interest coverage, and efficient asset utilization. So what their weaknesses are market to book ratio, inventory management, and operating margin. So they need to work on this part. What opportunities they have is market growth, debt reduction, investor relations, and efficiency improvement. So they have opportunity to improve on this. If they can capitalize on this opportunity, then great. And then the threats they can face is energy market volatility, environment regulations, competitive pressure, and geopolitical risks. So all these threats can negatively affect their financial performance in the future. So what recommendations do we have for Suncor after doing this analysis? So there are a few. So Suncor they need to increase their cash reserves, right, to improve their cash ratio. So they need to enhance their short-term liquidity and financial flexibility. And then they need to optimize their payment cycle to improve the working capital management, how fast the money moves. And then they need to reduce debt to lower the levels of debt to equity ratio to improve financial stability. They should also improve on optimizing inventory turnover to reduce carrying costs, and they need to improve the cash conversion cycle by streamlining inventory and accounts payable process. And they need to do cost control, communicate with investors, implement growth strategies, and increase their market perception.
So, in conclusion, Suncor Energy has showcased its resilience and adaptability in the face of challenges, especially during the COVID-19 pandemic. And the company's financial metrics indicate a positive trajectory in profitability and liquidity post 2020. So, however, to maintain its competitive edge, Suncor must address the areas of improvement identified above. Thank you.